We are coming up on the next Fed meeting at the end of July. This is Ron Wojciechowski for the Black Hole of Real Estate. And we know that the first Fed meeting with the new chair, they did nothing. And right now the Fed is divided, as best I can tell in all my readings and research, that about half the Fed governors want the rates just to stay where they are. And the other half, well, they're looking at actually increasing the rates to slow down ahead, the inflation that we're experiencing right now. My suspicion is we're going to have nothing, and I mean nothing, changing at the end of July in the Fed rate, which could be news for home buyers that were waiting for rates to drop and still buy over the summer months. We've been talking about this. And what I had mentioned was that if we're going to see a rate reduction, would probably be in July, more likely in a September meeting, which means that rates will have really stayed the same all summer long. And any activity in the market would have been for buyers that were foregoing any further drops in interest rates and just making the purchase that they need to move to get on with their life. Even if you get some sort of a rate reduction at the end of July, and again, I don't think it's happening, the quarter point will probably get priced in before it. So if you're watching rates and you were trying to predict what's going on, rates have gone from 5.98, back in February, to 6.25 to 6.49 a couple weeks ago. So they've actually trended back upwards as inflation has kicked in and some of the other stuff has happened. Now, my suspicion is if we see rates going down a little bit before the end of July meeting, what that's telling you is the market is pricing in a decrease in the rate. So when you actually get there, there may be little or no effect on July 28th, 29th, at the end of the month. So what does it mean if you're making a purchase? It means that you've got the next couple weeks to lock in with some certainty what rates are going to look like. And if they happen to increase the rates, you're going to see rates trending upwards between now and the end of July, which is every indication that it's probably going to get more expensive every day as we get closer to that. Catch your breath on this. Rates right now, they're between 6 and 6.5, and depending on your credit, here's a pro tip for you. Kids are all the gamers, the pro tips. If you got a big down payment and very little consumer debt and a big credit score, you're probably going to get the lowest possible rate. If you have a small down payment and a small credit score, like a low one, you're going to have the biggest interest rate, right? And if you have some mix in the middle of really high credit score and a low down payment, or a big down payment and a low credit score, then you get something in the middle. Lenders are always going to assess the interest rate as assigned risk to you. So to make it clear, really big credit score, really big down payment, you're going to get the best rate. If you've got something in the middle, a high credit score, low down payment, or a lower credit score, middle tier, but a bigger down payment, maybe that's right down the middle. But if you are low credit score and low down payment, you're going to pay the most because you're the most risky to the lender. And I hope that helps. So right now, my prediction is that the rates are probably just going to stay the same at the end of July, which really sets the stage for no movement until September. And the summer buying season will most likely continue to kick in right now. I think that buyers have resigned themselves that there's going to be little, if any, relief in the way of interest rate, and yet prices could very well be just trickling up a little bit. You may want to just catch it now. If you got questions, drop them below. Definitely subscribe. Hey, rate a review, and definitely check back in to us on the next episode. This is Ron Wojciechowski from the Black Hole of Real Estate.